bring Frank in for a second. Hey, Frank, what's going on, man?
Hey, how's it going?
Hey, thoughts on gold? What are you looking at?
So first off, I checked the bond yields falling for the third straight day.
Yes.
So that's a good sign for gold. I still think the same thing as what I said yesterday. Price is it doesn't look too healthy to the upside, but I think the next sort of like resistance, if it like reached it before like turning back down, would probably be in the 2030s or so.
Yep.
And even then we may see a complete head and shoulders, and by then I'm not really sure, but short term, like I guess it could rebound today, but I'm more focused on the market because of tech earnings going on right now.
So which ones? But are you looking at the S&P? Well, I guess Nasdaq, right? Are you looking at Nas at all?
Yeah, I was looking at Nas because they're all tech, but Microsoft beat earnings this morning, kind of boosted morale for the whole tech season of earnings. Amazon came up. They all opened much higher. I think they're kind of on their way down again, but
and Microsoft, for those of you guys who do not track stocks, Microsoft and Google, Microsoft especially, had like stellar numbers. Like it was very, very impressive. Also Visa had really good numbers. And then we also had Google report good numbers. So, I would say that that's promising for NAS as a whole. And we do see it still, despite some of those numbers, giving back some gains, hasn't moved a whole lot. Do you think any opportunity to the upside is there for NASDAQ on pullbacks here, Frank?
Yeah, I do. Actually, on the 4-hour, it came down to its 200 period, the simple moving average. Mm-hmm. And then it jolted upwards. And then right now it's showing some rejection from the lows. I kind of like how it looks right now. And I think we get a close at 10 of this 4-hour candle. So if we get a strong pin bar to the upside, I think we have a shot for a long here.
Yeah, that's an interesting.
Again, it's more so like a very short-term trade. I don't think stocks have too much room to run, but
Sure. Some good sentiment coming in from good earnings numbers from Microsoft, Google, and Visa. So, I'd like to also make sure we bring in our third guest here. We'll say hello to Mr. Tom. He was with us yesterday. Tom from Simply Forex. What's going on, Tom?
This is the last week to take advantage of the massive 40% off sale on the EdgeFinder. And don't wait any longer, because this is the lowest price that it'll be all year. The EdgeFinder is a revolutionary trading software that combines fundamentals and technical trading all in one to help you find better trading entries. This is the same software that all of our expert traders use while scanning the markets. As we strive to make the EdgeFinder the best trading tool of all time by updating and upgrading it regularly, you'll never have to worry about paying for anything, because the EdgeFinder is a one-time payment for life. So what are you waiting for? Get it at the lowest price of the year before it's too late. To get access to the 40% off discount, make sure you use promo code A1YT at checkout. If you have any questions about the product or sale, click the chat with us link down in the description below to automatically get connected with one of our team members right now. Remember, promo code A1YT for a huge 40% off discount on the EdgeFinder, ending very soon.
How's it going, Nick? Yeah, all good, thanks. Hello, Frank.
How's it going?
Welcome back to the stream. And
seeing you every day now, Nick.
Yeah, I know. It's been too long. It's been like a full.
We'll be moving in with each other next.
Yeah. Hey, so Tom, Frank and I are talking a little bit about the NASDAQ. Right. Frank made a good point. I'll show you my chart just for a second, catch you up to speed. We were looking at the NASDAQ, and Frank made the point that off the 4-hour chart, we had sort of this nice candle forming. We had for the audience members, again, maybe you don't watch stocks or anything like that, but we had earnings reported for a couple big names last night, some of the really big names, right? And these are, Microsoft, Google, and Visa, all three very important to, watch in terms of the state of the economy, state of markets, and that sort of thing. And all of them sort of were impressive. Frank's making a point for, this pullback could turn into something more in the short term. What do you think, Tom?
Yeah, well, from a technical standpoint, it's at a brilliant level for buying, if you ask me. It's still, you can see structurally on the weekly chart, it's, clearly in an uptrend. It's come back to a really interesting support level. And I think this trade has room to move into, potentially back up to these highs here. So from a weekly technical point of view, yeah, I like buys. And also here, this daily candle, yesterday's daily candle, bearish, but, had this large wick that closed back above these lows. So again, I like this gray zone through here to buy this indice from.
At what point, and I'll leave this to either one of you guys, let's say NASDAQ has something come out, more hawkish Fed notes, something from a technical perspective, where would you guys stop out? So I'm long the S&P 500. I've got my screen shown right now. I'm already long S&P. I don't have a position on NASDAQ, but let's just say I did, or either of you guys, you both seem like there might be some upside in the NASDAQ, which I would tend to agree with. Where would you guys put stops, and would you be entering just at sort of market levels where we currently trade? In terms of stops, at what point do you call this good if it goes wrong? Because again, as we always talk about on the streams, it's, whenever you take trades, you've got to consider what you're going to do if you're right, what you're going to do if you're wrong. Frank, what do you think?
Yeah, so I think right now would actually be a pretty decent time to enter. If we're looking at the daily or the 4-hour chart, we're kind of still at the bottom portion of where price has kind of hovered within the month of April. So we were below average, and now we're kind of hovering just slightly above like this small resistance level. So I think if we have room to run, we have probably like 2 to 3% to the upside. And again, price has just been going up and down for the past month. So I kind of think where we are now is sort of like a, short-term discount, especially with this positive earnings news coming out.
Yeah.
In terms of, you said stops too. I mean, the market does make lower lows and then all of a sudden bounces all the way back up, makes a higher high. So it's kind of unpredictable. But I would probably, to mitigate risk, would either put a stop below this 4-hour candle once it closes, or even below this other one around like 12,700.
What's interesting about that too, Frank, is that if this 4-hour candle, what you're saying here, I'll showcase my view for a second. If you're talking about a stop below this candle, and this is where stop loss management can be really important, because let's say a trade happens here. If you have options, like for me, I'm more of a swing trader, so I'd be willing to comfortably put on a little bit more of a swing size here or a stop size. But the pros and cons here are that if you're right about that, like if this is actually going to your point, show strength and continue, the risk to reward becomes really, really good. Just returning back to that high, you said a couple percent to the upside potentially off of this little catalyst. This becomes suddenly a 5-to-1 trade. So, if this in fact is sort of turning into a bigger move here, stop loss placement is important in that sense. It makes your risk to reward. Whereas if we widen that stop out to here, you only talk about a 1.65 to 1. So risk to reward is something really important, because again, as traders, we're trying to find the best possible scenarios where we can make the most and lose the smallest if we have to. Tom, what do you think on NASDAQ in terms of stop loss placement entries? What are you thinking there?
Yeah, totally agree. That H4 candle, I would look for lows around here, like Frank said, around the 12,700 level. Personally, I would like to see a break of this level through here. Yeah, because I like to be with H4 structure or at least H1 structure. So I would like to see a breakthrough here, retest, just to confirm the move, and then I would look to buy this pair. But yeah, and totally agree as well. The risk to reward is potentially, great from this level. If we could take it back up to some of these highs. But yeah, I need that structure break for me to add an extra piece of confluence and give me the confidence to take this trade.
Sure. Yeah. No, and that's the cool thing about these streams is we talk a couple different styles. Some people want to see more breakouts. Some people want to trend follow, mean reversion. It's always cool to see different takes on it. Last night we had the Australian CPI numbers come out, caused some volatility on the Australian dollar against all other currencies as well. I was personally looking at the Australian dollar, and again, CPI numbers, for those of you who did not see the number, I'll pull it up here in just a second. So let me go Forex Factory. So we had CPI numbers come out last night for Australia, and year over year it fell. It was expected to be 6.5%. Inflation came under at 6.3%, which causes an interesting lack of demand for the Australian dollar, as there was already sort of a lack of urgency in terms of central banks the Australian, the RBA, right? We have interest rates. In terms of globally, we have comparing Australia to the US, right? We have a pretty big divergence there where the US has a much higher interest rate. This makes the US dollar in many cases more attractive. Well, we sort of saw that expectation continue to widen the gap yesterday with lower than expected CPI, because again, high levels of inflation caused the central banks to keep this number high, and low levels of inflation, like we saw out of Australia last night, show less urgency to keep this number high and could actually, rapidly decrease the value of the Australian dollar, which we sort of saw. My opinion is that if we get sort of pullbacks to the 61.8% retracement, some sort of retests, it might be an opportunity to look to get short.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.